Hello, welcome to another episode of TextWired by Aman. I cover topics in textiles and fashion to educate consumers about their consumption and the industry in general. So, in today's episode, we'll be talking about some of the textile stocks that are listed in the Bombay Stock Exchange and National Stock Exchange as well. And to join me in this episode, I have my very good friend Siddharth, who is also the host of Bazaar podcast. He covers a lot of business and the economics of India. So he's also a great childhood friend. Hello, Siddharth. Welcome to the podcast.
Hey man, thank you for having me on the show. It's always a pleasure doing a show with you, and I'm really excited to talk about what we have in store today. So yeah,
Yes.
thank you.
And before I start on this whole stocks and everything, I want the viewers to know Siddharth is CA by profession and has worked as an auditor. And I think he's the perfect person today to talk about stocks, and I'm sure. And I think this is our third episode, right, Siddharth?
Yeah, it's our third episode. More to come.
Yes,
Uh,
of course, yes.
yeah,
It's always great to have this such podcast episodes with you.
yeah, man, and I'm excited for today's show because honestly, I don't know much about the intricacies of how the textile and the fashion industry works.
Yeah,
I know that the industry is a capital intensive one. Like you've got to put a lot of money up front. You have to invest in machines. You have to set up your own manufacturing process, contract manufacturing, all of that stuff. So
yes, it
it's
is.
a very capital intensive industry, and a lot of times you don't know how much demand is going to be in the market. It's also very cyclical in nature. So yeah, man, this is a very exciting industry. You are operating like you are someone who is very close to this industry, so you have
Yes, I
like
have my
really good knowledge.
me having my own textile business. It's all about pre-planning and pre-production from before the seasons approach. So textiles and clothing is like generally it's all about fashion, and these fast fashion brands have made it like every week is a new fashion. So there's a lot of planning that goes into it, and you have to be
Hmm.
ready with the product when the season starts. So especially in India when we have like Diwali. So Diwali is about in November. So the production and designing everything starts by May. So there's so much planning that goes on, then selection of fabric and everything. So
Hmm.
it's you can never say how much you will sell out because you
That's
have to
true,
be
man.
ready. You
It's
cannot.
very difficult to predict also, right? Like,
Yes, you can only predict based on how um, you can only predict from your personal sales patterns, because it's very hard to have an economic view, because
hmm.
I don't know if they're publishing such numbers. Like, okay, online shopping can be tracked because of orders and everything, but offline it's very hard to track. It all depends on
Yeah,
how much you are selling. So it's you have to make prediction based on those. So yeah,
yeah, man. It's interesting, definitely.
yeah, and so I have like so it was very interesting to see how these listed companies are working with uh, such a value chain.
Hmm.
Yeah. Okay, so for today we have four stocks that I would like to discuss, and we would also analyze with the viewers. So from topics like their history and how they operate, their current market share, and a lot more about their history and stuff. But before that, I want to briefly share the value chain of this whole garment industry. I mean, the whole textile industry, from yarn all the way till the garments.
Yeah,
So
man. I think it's quite important, right? Uh, to understand exactly how the industry works and how the ecosystem works as well. Like when you are investing in any company, it's very important to understand which industry the company is in. So, for example, like if you love airline stocks and you want to invest in SpiceJet, let's say, but when you study the industry, you understand that it's incredibly difficult to make money in the airlines business, and even legendary investors like Warren Buffett, even they have been burnt. Like I think Warren Buffett lost around $7 billion in airlines.
hmm,
So
right.
you need to understand how the industry works so that you'll be better able to identify which players are in a better position to capture market share, deliver returns, to have a competitive edge as well. I think same goes with textiles and the fashion industry. It has a lot of moving parts. It's very important to understand how things work, how the entire value chain works.
Yes.
And Aman, I mean, I want to ask you this. So I'm like, let's say, I'm a newbie looking to get into the textile industry, and I want to research stocks in this category. So how does the value chain operate? Like, where does the process start from, and how do you get to the finished product? Like, how does the entire value chain work in the fashion industry?
Okay, that's a very good starting point. So that before we start, it's very important before we analyze any company, we need to know the nature of the business and what exactly it is doing. So if we don't have a general idea about what the business is about, then we can never know what to evaluate from. Like, we cannot have an opinion otherwise. So, for in this whole textile industry, from yarn all the way till garment, so the first step is the yarn. Obviously, yarns are these threads that make up the whole fabric. So, in yarn, it's divided in between natural and synthetic. So, natural, this is this process called spinning. So, all these natural fabrics are spun, and they go through a process called
Hmm.
sizing that improves the strength of the yarn when they make the fabric. Otherwise, these natural fabrics, they have very small fibers and it can easily be detached. So there's a spinning process to it, which is a huge part, because imagine how much cotton you have to pick up from the farm and then spin it to make threads. So that's a whole segment just in the natural fabric. And another one is the polyester. Now, polyester, there are huge machines that have to melt the polyesters, and you have to make polyester chips and then spin them, go make the so many, because uh, threads are really small and really thin. So you have to create a whole process to make such thin yarns, or like, if somebody doesn't understand yarn, it's a
That's
very thin.
plastic, right? Like
Yeah,
polyester is plastic, right?
yeah, it's like plastic threads. To make plastic threads, and threads
Right.
are really small. Imagine when you look at your
Hmm.
clothes, how many threads are there? It's very hard to count. So
Damn.
imagine, so it's very hard to imagine how small these, like, plastic threads they have to make. And they come in so many orientation means uh, in what characteristics these yarns are there, which are further divided into so many other more. So these is the first
Hmm.
to make the yarns, and then we move on to the fabric. So fabric is called, there are two ways. Usually there is weaving and knitting. There are other moves also that go into the technical textiles, which is not clothing. So they also have other method, but generally what we know is weaving and knitting. So say that a t-shirt
Hmm.
that you're wearing, that is knitting, and the shirt that I'm wearing is weaved.
Okay.
So knitting, you have like
What's
these
the difference?
circlers, you have these small circle kind of thing in, if you look closely, like how a plain weave the shirt that I'm wearing. If you look closely, you will have like x-axis and y-axis. They have things that strings,
Oh,
threads that run
yeah.
top down and like left and right. So this is done on the machine. So this is weaving. So you won't see in
Hmm.
your shirt, you won't see threads running up and across. So that's knitting.
Understood that. Quite interesting, man.
Yes, so this is one way to, and there are obviously shirts. You can just in this shirt there you can do so much with shirts, and even just with t-shirts, there are whole segments of t-shirts also. There's minimalism,
Hmm.
there is sportswear, there is casual wear, and they have like normal t-shirts where you print things on. So there's all these other
Yeah.
so many segments. So before it goes to the production aspect, the fabrics needs to be finished. So these you have to go through processing. So like processing is called like
Hmm.
dyeing or printing. So like what my shirt is, it's printed, and yours is plain dyed. So so there are other processes, there are other mills that do these with the fabrics to make it more
Hmm.
uh, garment ready, I would say, like make it more finished as a fabric. So that's why they're doing. You can do the smoothness of it, or you can do the stentering with the polyester fabrics and stuff to smoothen it out, or you can do a lot of things with the processing. And later, when the whole fabric part is done, then you have the whole segment of stitching, which is garmenting. So where you have to cut the fabrics
Understood.
into so many parts, and then stitch them together, and then the quality of stitches, how you stitch based on fashion design and all, you know uh,
Mm.
traditional, non-traditional, and stuff like that. All of those are in those stitching. So you can see the whole value chain is so large, and there are so many small moving pieces, like you mentioned.
Yeah.
So textile is such a vast field, I would say. So this is what happens in textile industry. Now let's see what like how these listed companies, what they are doing and to what extent they are capitalizing.
Yeah, man. I think what you just gave here was a really good breakdown, like starting from the yarn, the spinning, sizing, how the entire yarn, like the cotton is converted into yarn, or like how polyester is made, then how the fabric is made, like weaving, knitting, then the processing aspect of it, like dyeing, printing, and then
Yeah.
finally stitching the final product and then distribution. So like a lot of moving parts. I think a lot of companies operate in these niches, like subcategories, and
Yes.
I would like to cover a few interesting things about the textile industry. So I was when I was researching for the show,
Right.
I was surprised to find this out that textiles is the second largest employer after the agriculture industry.
Oh yes.
So
Yeah.
it's an absolutely vital industry for our country. It employs more than 35 million people directly. Like, I'm not even talking about the indirect employment here. It
Hmm.
directly employs 35 million people. Also, a lot of exports that happen from India are textiles, like clothes, uh, most textile products like innerwear, garments. So many
Yes.
things are exported from India.
Yes.
So you know the exports in this sector are also quite high, contributing to a good amount to the total exports. And I think it's one of those industries, one of those sectors which is ripe for disruption,
Right.
because we are seeing abroad like if you go to US, you'll see companies like Stitch Fix. You know what Stitch Fix does, right? It gives you a box with clothes in it, and then that box
Right.
is delivered to your house, and you get to choose which clothes you want. So you know
Yeah.
like
They are based
a
in
lot of
the.
this.
Yeah,
Yeah.
yeah, yeah. So I would say it's because that's one reason why the labor in India is cheaper, because all these 35 million people that are being employed, most of them are how do you say, low income people.
Mm,
So it's
yeah.
that's why without you don't need a lot of education and
Mm,
like knowledge to work in such industries, like because like there is such thing as like transportation, and like picking cottons, you don't need high level of education. Anyone can just pick cottons, you just have to
yeah.
know which one. It's like
That's
plucking
right.
fruits, you know you don't need, you just have to know which fruit is ripe. So you just have to pick cottons out,
Yeah.
you have to, and you have to let the machine do the work. And this, so it's a lot of the all a lot of the pro, the production part, so it is done on the machines anyways. And
Mm.
these, because these machines, uh, they produce or they do the work in such large quantity that you need so many people to handle the production that's coming out from these machines. That's right.
Understood.
Yeah.
But my point here is that like even the companies that we are going to be talking about in this episode, they also have to constantly innovate, because this industry is going to be disrupted probably in the next 10 years. These many it will not be very labor intensive. Like, I think a lot of people, like of these 35 million people, it is unfortunate, but as automation happens, as this industry gets more technologically advanced, I think uh, it's going to be difficult for manual labor to survive in this industry. I don't know like exactly
Yeah.
how much time it's going to take,
Yeah. And
but
also, with the current knowledge that we all have access to, you need really basic knowledge, and you have to keep at it. Like there are few
yeah.
instructions that machine. So if there are uh, so many yarns that are on the machine. So if a yarn breaks down, you need somebody to look after it. So you just have to know how to put it
Hmm.
back on the machine, which somebody who has like a bachelor's degree will not want to stand in a factory just looking if the machine is functioning. Nobody would want to do that. So
You can
that's,
automate that, right? You can automate that.
yeah. So these are the inaccuracies that you have to look. So you can only make the machines more efficient. but you will always need
Understood.
somebody to stand, unless somebody comes up with a machine that is just works another way completely. That's what's being
Yeah.
done currently. Then yes, I think that's what's happening in China. The machines are running really efficient, that they don't require so
Hmm.
much labor. Like even the machines
Yeah.
run really well overnight when the laborers are not present. And I think India, that's not the case.
Those guys are very efficient, and like in this episode, the companies that we're going to be talking about, right, they also really have to up their game. We're going to be talking about four companies, I think: Raymond's, Page Industries, Alok Industries, and Trident. These are all listed companies on the Bombay Stock Exchange, on the National Stock Exchange, and we'll cover their history, their performance over the years, and see how the future looks like.
Yes.
So yeah,
Yeah.
let's get right into it.
Yeah. And okay, so for listed, so because of the value chain is so vast, Siddharth, I want you to give viewers some idea about what's the need to be a listed company. Because right now there is such a ease that anyone can open an Instagram account and start selling clothes, or you can just have you can raise a little bit of fund, set up few machines. You can customize the scale at which you want to work. So why do you think there is a need to be a listed company? What's the benefit that you don't get from being a private or small scale?
Yeah, man. A couple of points. So, like, the reason why companies go public in the first place is because uh, they want access to more capital, right? They want to repay their debts. Maybe they want to open a new facility, a new product line. They want to expand beyond what they're currently working at. So,
Right,
there's a point up to which you can take a bank loan, right? After a point, if you want to expand, you need
right.
more capital, you need more money,
Hmm.
and taking more bank loans after a point is going to hurt you. So what do? uh, you invite the public and the financial institutions to invest in your company.
Hmm.
uh, those guys, they get a share of your company, and you get the money to chase after your vision. So what happens is you basically come out with an IPO. Public sector guys, like mutual funds, the
Right.
retail investors, there are different categories. They invest in your company, they give you the money because they believe in your vision. So that's the primary reason to raise capital.
Hmm.
Second, I would say, is that it makes the company more credible, because investors start paying attention to you. Employees want to work for a listed company, because there's also a chance to get ESOPs. Like ESOPs
Right.
pay well, so a listed company will always attract more employees, more talent. But the real reason, I'll tell you. So this might sound a bit controversial, but this
Okay.
is the reality. Nowadays, the real reason why companies come out with an IPO is not to raise capital, or to become more credible. It's to give the venture capital guys a very sweet exit, so that
Right.
those guys make money. And
Hmm.
that's the reality. I mean, if you see companies, like, if you see the IPOs that have come out uh, in the past 6 months, and even now, like Zomato is going to come out with an IPO. It's a loss making company, right?
Right.
Doesn't have to come out with an IPO, but the venture capital guys have been in the business for more than, like, I don't know how long, like more than 10
Hmm.
years. So they want to,
Yeah, they have
they
an
want to
exit
make
plan.
profits as
Right.
well. Yeah. Also, like, one thing people need to understand is that getting listed is not all rosy, not a very sweet ride. Because once you get listed, you fall within the ambit of SEBI, and also your administrative reporting increases. You have to release quarterly earnings, take investor questions. You've got to really perform well, like you become very accountable as well, because one bad quarter, and then everyone starts questioning your leadership. uh, your stock price drops as well. uh, you get more media coverage, because you're a listed company, so you cannot do anything dumb, right? If you do anything which is controversial, then again your stock price is going to drop. So all of these things to remember. Getting listed is good, definitely, for the company, but yeah, I mean, it does take away a lot of freedom that a private company enjoys. So that's there. Yeah.
Right. Okay. So I guess that's enough groundwork. Let's start with our first talk. I think, yeah, our first talk is Raymond. I'm sure everybody knows about
Hmm.
this name. It's nothing new. It's a very big brand, and it is also a listed company. So I think they are everywhere when it comes to fabrics. So Raymond started off as a woolen mill in Thane, a place in Mumbai, which was owned by a with a very wealthy family. Later, it was overtaken by JK Group, based on Kanpur, in the year 1944. And at present, Raymond has expanded its operations in textiles and aviation, and as well as engineering. So there are three segments to the company. And in the textile segment, which is important for our podcast today, it has become the most renowned brand when it comes to suiting and shirting. And,
Definitely.
and this brand is producing one of the finest and high quality premium fabrics at such a large scale that now it accounts for about 60% of the whole market share in India in this whole segment of suiting and shirting. And suiting is all those
Wow.
blazers and suits and everything. So that's one. So Siddharth, have you ever bought a Raymond fabric?
What do you think?
I'm sure at some point, maybe even you don't know you were buying Raymond. That's how big it is.
I have bought like ready-made stuff. Uh,
Okay, yeah, fair.
Probably one shirt of Raymond's for my for office.
Right,
But you know how I am, right? I'm the worst kind of customer to have because
right, right.
I'm
I
the
know.
guy who I shop like once every 6 months, and that's when that 50% off sale is going, and I purchase everything then. Like
Yeah,
most of my shopping happens when that sale is going on.
yeah.
But yeah, man,
I
I
think
don't think I don't
fast
think I've
fashion brands need to avoid you for sure. You are
I've
not a data point.
I'm the worst customer,
Yeah.
honestly.
And fun fact,
So
I'm actually wearing a Raymond fabric apparently. It was not planned at all.
you are the guy with the fashion sense, bro. I'm I'm the guy who
No, I
like
do tailor it, so yeah, I'm aware of Raymond's because I happen to purchase
yeah.
this, of course. So, what do you think
So
is, from your aspect, how do you think Raymond is doing?
yeah, so to just complement your point, Raymond's has been in this business for over a century now. They started their operations as a woolen mill company, nonetheless,
Right,
but they have really pivoted their business model over the years. Uh, it's a legacy company. They have a lot of knowledge when it comes to how the textile industry works. They have a lot of knowledge over the years, so they have positioned themselves very well. Their brand is recognized very well in the minds of the consumers. Like everyone knows Raymond's, right, and
yeah,
the brand that it represents.
of course, even internationally,
So
yeah,
yeah, so the brand has grown internationally as well as domestically, and a lot of people actually believe that Raymond's is a foreign brand. Like even I, at some point in my life when I was a kid, I thought that Raymond's is a foreign brand, but it's a domestic brand. And I
mm,
want to talk about certain growth drivers, like what's working for Raymond's. So obviously the biggest growth driver for Raymond's right now is its brand, and India being a relatively young country, uh,
right,
most of the population is aged between, I would say, 18 to 27. So the demand for premium suiting will obviously increase as people do well in life, more people get employed, the demand for that is going to increase. But one thing to keep in mind is that with the COVID thing and the entire work from home thing right now, it's really hurting Raymond's because people are working in their underwears, honestly, and
right,
they're not they're not going to buy a suit to work from home, right? So that that hurts Raymond's. Uh,
yeah,
but in the long run, I think Raymond's has a really strong retail network. It has around 1,100 exclusive stores in
right,
380 cities. It has brands like Park Avenue, uh,
mm,
Parks. Raymond's obviously is the namesake brand, among others in its portfolio. So it's got a really good portfolio as well. And I think that's what's working for Raymond's.
mm,
Yeah.
right.
And
And I
I
think,
remember, like pre-show, you were telling me that Raymond's is also investing a lot in technology, and it's working on something called Raymond 3.0. So what is that about?
right. So this Raymond now being, because they are a brand now, and with brand comes brand positioning, how you can position yourself in the minds of consumers. And Raymond and right now, based on the brand positioning, everybody sees Raymond as a premium brand. So now what they
Hmm.
are coming up with this Raymond 3.0 is this concept called the complete man. So the complete man in this Raymond 3.0 will weave technology and professional tailoring expertise. So it will offer consumers with a very unique experience. And a part of this initiative, they're also introducing something called 3D manufacturing and digital body measurement. And I think that is going to be
Cool, man.
that I think that is going to be through AR technology. If I'm sure that's what it's going based on. Also, it is going to open 75 tailoring hubs and over 1 lakh of like specialized tailors to service all these customers. And it's only going to show that Raymond will do everything it can to maintain its brand positioning. And along with that, there is another initiative of explorers, and it is catering to the upcoming generations. Like how you said, the average population of India is very young, so there
Hmm.
are older generation. There are like our um, the older people in the population. They also know Raymond and they have been shopping Raymond, so they are also catering to them, as well as the new customers who are younger, who are like being introduced to this professional life and office and everything, and they want to suit up with their career. So Raymond is also doing something for them based on uh, based on their requirements, being the new age. And I think these young customers, they emphasize more on customization and personalization, which I think the older generation didn't really care about. They just wanted something that's
Hmm.
premium, that felt good, and that was that.
Yeah.
They look good. But the younger generation, they need uh, more, how do you say,
Style.
they want to build a relation with the brand somehow. I think that's where the whole consumer mindset for the younger generation is going, as far as I have researched. So
Hmm.
that's that. So what do you
Yeah,
think, is
definitely,
that,
man.
like, you being in the whole financial segment, do you think this all these new plans are going to help them in the future uh, to recover from post COVID and everything?
So my honest opinion is that Raymond 3.0 sounds like a bold move. Uh, but again, you need to ask the question that, is it going to appeal to a lot of people? I don't think so, because Raymond's as a brand doesn't appeal, and it's really out of the reach of the middle class and the lower middle class in India, right? Raymond's is a premium
Yeah, okay.
category. Uh, it's a premium brand, right? So a
Hmm.
lot of people, like even me, I'm not a rich guy. I'm a guy from a I'm a middle class guy, right? I won't buy a Raymond's. Like my my priority is not going to be Raymond's, right? So
Hmm.
it doesn't appeal to the middle class and the lower middle class. And
Hmm.
honestly, I believe that the biggest threat for textiles and for Raymond's right now is remote working, because companies are giving their employees the option to work from home indefinitely. And what's going to
Yeah,
happen is that why would you buy a suit anymore, right? If you're working from home indefinitely, you're not
yeah,
going to buy any clothes. Like most of your stuff is going to be just like like trunks, some casual wear, that's it. So
yeah.
you
Some
know
jobs that are work that can be done from home, they are I think going to be permanent, even like post COVID. So
exactly.
those things might not change.
So, and I mean, Raymond's is not only in the suiting segment, it's also in other categories as well. But again, why would you buy something branded if you're working from home? It doesn't make sense to spend that kind of money. And
Yeah.
I think apart from that, there's also one other red flag which I really want to cover, is the family fight that's going between Vijaypat Singhania and his son Gautam Singhania. So these guys are the promoters of the company,
Okay.
and I think you'll find this very interesting. Vijaypat, the guy who created, like, who scaled this company up, he gifted control of the company to his son, not knowing that one day his son will kick him out of the company so easily. Like that guy just kicked his father out of the company, and now Vijaypat is continuously trying to regain control. He's
Okay.
trying to defame the son. He's trying to say that he's not a good guy. So This is something which investors don't like to see. Like if you personally ask me, I don't want to see controversies, right?
Yeah,
If you
being a
see the
board, you
Tata's,
don't want to see anything like you don't want
yeah,
such informations out. It's threatening.
it hurts the stock price, right? So that is
Mm.
another red flag. And you asked me, like, I'm a finance guy, right? So what do I think? So I believe that the numbers don't lie, right? So I will not keep it, like, I will not make it boring for you guys. But if you see the company's financials in the last 2 years, the company has witnessed a phase of degrowth, meaning that the sales has actually gone down. And
Okay.
in financial year 21, the sales dropped by 50%,
Oh,
like because of COVID. So, you know, they will continue to feel the pressure as long as the pandemic goes on. The company is also in a loss, they're not making a profit. And
oh,
I believe that it will bounce back, but I mean, the margins of the company are quite thin, which means that the company is not going to give you like stellar growth. And
mm,
even if you look at the stock price, if you had invested in the company 5 years ago, you you'd still be making a loss, because at some point in the previous 5 years, it touched a peak of 1100 plus in I
right,
think in 2018, and which was a really good year for it. And since then, it's been on a downward spiral, and today the company is trading at 370 rupees a share. So I
right.
mean, I
Yeah, I
I
checked.
personally would like to see the company bounce back from COVID, but I would not invest in the company right now before they can bounce back from the current scenario.
Right. So yeah, I was also checking the stock price just to see for myself, and I think before COVID it was about 750 ish, something around that price,
Yeah,
and now it's about 335. About that's lower than half of it within a year, and a
COVID has
company
been really bad for it.
and for a company which is working at such a large scale and trying to grow its business from like for the past 10 years or something with all these future plans such as Raymond 3.0, and for the stock price to go lesser than like the stock price is 60% off basically as of now. And wow, you can never say anything about textile stocks because it can be really uh it can be really
It's a cyclical business.
yeah,
It's a cyclical business.
yeah, it, you just don't know where it's going to go sometimes. Like if the trend is out, then the business is out as well. and
Yeah,
and because of COVID there is no trend. You can't make a trend anymore.
yeah, definitely. Like no one's gonna buy a suit, so that's
Right.
hurting them.
Yeah. And I think like the next stock is something more interesting than Raymond. This is something that this stock is first I it would be like my personal favorite for today, and it's called Page Industries.